Hello and welcome to episode 18 of the Gold Goats and Guns podcast. My name is Tom Luongo. It is Tuesday, June 27th, 2017. Lots to talk about. More is happening in the world today than has happened in quite a long time. So let's get to all the more. So, excuse me. The ECB came out this morning with a statement. It was Mario Draghi's latest statement. And as you don't remember, Mario Draghi is the president of the European Central Bank. And his statement this morning was taken by the market to be incredibly hawkish. Like he's not trapped and that he doesn't see bubbles anywhere, which is amazing considering that there's all of those European sovereign bonds that he owns something like 17% of the issuance for the four major countries within the EU: France, Germany, Italy, Spain. The four biggest problem children: France, Portugal, Italy, and Spain. And I guess he doesn't think that all that buying and him being the largest buyer of all of this debt hasn't driven bond prices in the European Union to record highs. That's amazing. But he doesn't see a bubble anywhere. Truthfully, people, the situation in European capital markets is so fragile. I can tell you, but in all the capital markets is so fragile that I can't begin to tell you how bad it is. So yesterday morning, I got a DM from a person in Canada asking me about a link in one of my recent articles on Seeking Alpha, which was about the Canadian housing bubble, and that I had a link in that article to a Chinese Ministry of Finance missive, which said that the new capital controls would be going into effect on July 1st. There was a picture of it was a Chinese language blog that I found, and there was a picture of the thing of the missive. And it was dated May 21st or something, like late May. And there's no mention of this anywhere on the internet. Go look for it. You won't find it. Pretty much this is the only source you'll find. And I spent a long time trying to figure this out. But this person said that the link in that article linked to a porn site, not to this Chinese language blog. Now, if it had actually linked to a porn site, Seeking Alpha's editorial staff would have caught it, and they would have never published the article. And I would have heard about it, by this point, because the article's been out for almost 2 weeks now, and nobody mentioned this in the comments or anything else. So, interestingly, I responded to the person and said, well, that's not the case, and okay, well, here's a web archive of the article, so that, you can go on with your life, and I can go on with my life. Turns out that this person was Canadian. This is a bit of information that nobody wants to have out in the real world. This, to me, is indicative of just how panicked they are about the changes within the marketplace. And today, Draghi coming out and making a statement like this is simply a way to keep the euro from breaking down before we get to the quarterly close. Quarterly close will be on Friday. The monthly close and the quarterly close will be on Friday. There's going to be a lot of weirdness happen in the market between now and then. There's going to be a lot of kind of normalization happen in the markets between now and Friday. With the Fed and the U.S. banks actively using the reverse repo discount window and their $2.2 trillion excess reserve fund to manipulate the bank balance sheets as they come to the quarterly close, don't be surprised to see weird things happen. So the dollar sold while they go buy treasuries and all this kind of weird stuff in order to dress up their capital requirements and whatnot, because this is what banks do. They have such flexibility in how they can report earnings that they can dress their earnings report however they want as of the final day of the quarter. And we always see this in the last 2 weeks of the quarter. We see all sorts of strange things happen as they go hit the reverse repo window hard in order to rejigger their tier 1 capital portfolio to meet their capital adequacy ratios and to, alleviate shareholder distress and all of that stuff so that they can report that they beat the street by a penny. So that's what's going on now. Notice that the euro, after Draghi statements, popped up from around, just under $1.12 to almost hitting $1.13. Remember, if you've been following this podcast regularly, you know that to me, $1.13 is an incredibly important level. And we haven't seen a move above that this month, and I don't think we're going to. So, and if we do, it'll be very strange. And I think it'll be one of those false moves that continues to plague these markets while getting more and more people on the wrong side of the market. Because, while at the same time Mario Draghi doesn't see any bubbles in bond markets, the Italians had to close, the ECB closed 2 Italian banks on Friday afternoon after the markets closed. We're back to that again. It's 2017. It might as well be 2007, 2008, where the FDIC was closing banks every Friday afternoon so as to not spook the markets, and then have everything resolved by Monday morning when the markets open. Well, the same thing's here. According to a recent article by Zero Hedge on the following up on this, 2 Italian banks were wound down for a $17 billion bailout, which is pretty much what the Italians spend on defense every year. I'm sure Donald Trump's not happy about that little tidbit. So, we've got more hot air from the ECB trying to keep the euro from reversing. We have a quarterly close coming up, which is making all of this easy. We've got bailouts happening and bank failures happening with alarming regularity now in the EU. We've got an epic bond bubble having been blown there. We've got stock markets here in the U.S. defying fundamentals and trading at all-time highs and possibly going higher because it's, as I said before, we have the beginnings of European capital flight, and gold and silver have both been under pressure, as has oil. As the dollar looks to bottom here. Because even with this move today on the euro, the rest of the market doesn't look all that, the yen is broken down, so the dollar, USDX hasn't, trade-weighted US dollar index hasn't really moved. And the yield curve continues to collapse. Well, it continues to try to collapse, but it's kind of the 210 spread sitting there right there at 0.8%, not really breaking down. And I'm not convinced that we're going to get a yield curve inversion here. I really don't. I think that we're going to start getting a massive move into the entirety of the U.S. yield curve in Q3. And then all these guys that are calling for an inversion of the yield curve and a massive recession in the U.S., well, those things are true. We may get further tightening of the yield curve, but I don't think we'll get any kind of yield curve inversion. Not until after things start letting loose in Europe. So. On top of all that, Angela Merkel has completely doubled down on being the leader, effectively the president of the EU. We have more sanctions on Russia, which I find really, really funny, because that is such a winning strategy for the EU. Just like hard, ridiculous, over-the-top Brexit negotiations are such a winning strategy for the EU. Just like Spain refusing to acknowledge the fact that Catalonia wants to secede is such a winning strategy. None of it's a winning strategy. It's all, suing Poland and Hungary and the Czech Republic and Slovakia over not accepting refugees. Such a winning strategy. Watch the space carefully, because while Illinois may be on the verge of being Illinois may be on the verge of default as of Friday if they don't come up with some kind of budget plan. What's going on in the EU is 10 times worse. Draghi is rapidly reaching that moment where he has to end QE, just like the Fed had to end QE because they ran out of the long end of the yield curve to buy. And Draghi is in the same position. Either he has to continue to change the rules so that the ECB can buy more debt at negative interest rates, or he's going to have to end QE. And that's part of really what he was trying to virtue signal today with this communication. And I don't think the markets are going to be happy about that long term. So I wouldn't consider this sustainable. I think what's going to continue to happen, is capital is going to continue to leak away from the EU. And we're not going to get any kind of political consolidation. We're going to continue to get political fracturing. And at some point, everybody is going to go, oh my God, the man has no idea what he's doing. And that's going to be that. The problem at this point is that nobody is convinced that anybody knows how to get us out of this. And I think that that's really the dawning realization on the market at this point. It's no longer that they have faith in the central banks. It's that more and more people have no faith in any central bank. And they're not sure, which one. Because remember, in the race of global economics and the race for global capital, you don't have to be good to get the money. You just have to be better than the other guy. It's like being chased by a bear, right? You don't have to be the fastest guy running away from the bear. You just have to be faster than the slowest guy. And whoever is the cleanest, dirtiest shirt in the laundry gets the capital, gets the lion's share of the capital. And that's the United States. It certainly isn't Europe. All right. And then the last thing I want to talk about before we go any further is, speaking of the United States, is Donald Trump even in charge of this country at this point? I don't know. I think that if he is acting rashly. And that's the nicest way to put it. If you guys woke up this morning and you were following the headlines at all, you'd know that late last night, or yesterday afternoon, the White House issued a statement warning Syria not to engage in any more chemical weapons attacks. That we have intelligence sources that say that we know that the Syrians are considering another sarin gas attack. What another sarin gas attack? There wasn't one in the frickin' first place back in April. Seymour Hersh came out yesterday with a scathing review of Trump's actions during early April, in the aftermath of the supposed chemical weapons attack, which was absolutely a false flag. And Hersh's article makes it abundantly clear that Trump knew that there was no sarin gas used, that his advisors at every level, intelligence, military, national security, all said the same thing. We don't have any proof. What are you going to do? You can't do anything. And Trump acted unilaterally. They're going to hang him with this, guys. They're going to hang him with this. And this press release and Nikki Haley going and banging her shoe at the UN again is telling us that they're just responding now to try and make things look as good as possible. And Trump's more worried about his media image. He's more worried about his approval ratings than he is about actually doing his job. The Supreme Court yesterday ruling in favor of the travel ban 9-0 was a survival tactic for the Supreme Court. This was an obviously illegal injunction, an erroneous and unconstitutional injunction issued by the Ninth Circuit. Nobody outside of the Ninth Circuit and those who watch Rachel Maddow think otherwise. It's clear that this was a judicial overreach. If the liberal members of the Supreme Court had voted to uphold this travel ban in order to write a minority report, in order to try and damage Trump, all they would do is further damage and erode our confidence in the Supreme Court. They had to issue the ruling that they did. No one ever thought that they were going to do anything otherwise. So for Trump to spend most of yesterday crowing about this is silly. It's dumb. It's a waste of his time. And it shows me that he's more worried, he is absolutely worried about these petty things than he should be worried about what his people are doing around him with regards to Syria and Saudi aggression in the Arabian Peninsula and the potential for war in Iran and everything else. They're going to try and hang him with this then. If Mueller comes back with a recommendation to impeach, if he comes up with anything at all, look, they don't need proof. They need insinuation. It's not a legal thing. This isn't a legal proceeding. Mueller's got an open-ended investigation here. All he has to do is, because the investigation is ongoing, he can just continue to add things and document every mistake Trump makes, and then use that as a laundry list to go after him for, and neuter him. At best, neuter him, and at worst, get him thrown out of office. And Trump's not helping himself. He's just not. All right, let's go on to the charts. Let me show you what's going on in gold and silver. All right. I said the last time, 4 or 5 days ago, that I wanted to see a close in the upper half of this bar without breaking above 1260. Not a strong close. I didn't want to see more push, right? In order to get a higher probability setup that we could then go higher this week. Well, we didn't quite get that. We had a huge washout yesterday in gold, which has been mostly reversed, which is actually also really good, because what it's doing is it's proving to us as we get to the end of the quarter that there's very little chance of us breaking down below this 1206 mark down here, which is awesome. So, and then looking at the bounce back today, we're only a couple days before the end of the quarter. There's a possibility here of actually getting an engulfing bar to end as a bullish engulfing bar to end the week. That would also be really strong. To have this low be violated here, and then have a tremendous snapback coming into the end of the quarter to stabilize price, that would actually be really strong. Okay. Not to say that the prices are going to move higher or anything else, but it's that there's strong support underneath this market to mark this as a new low and keep this weak uptrend intact, this weakening uptrend intact. At the same time, the quarterly chart doesn't look good, and neither does the monthly chart. So it's going to take a strong push in July to get us to push above 1300, or all of this is just, it's still not good, right? It's all just kind of noise within a topping pattern in the gold market. The other possibility here is that we're just setting up that this is now becoming a new trading range between 1200 on the low side, 1300 on the high side, and this is where we're going to be until we get a breakout. That could happen. That would also be really good. While the rest of the world breaks down, to have gold not wash out below $1,000 during a liquidity crisis would be fantastic, because that's what I'm worried about. And I refuse to get bullish about gold until I see some kind of really strong move above 1,300. Either coupled with a policy change, coupled with a massive geopolitical event, or just, good old-fashioned breakout. Okay. Looking at silver, we have the exact same setup, except it's even a little bit more bullish. You've got the same thing going on here. You want to see if we got to close above 1676 this week, which is very, very possible, considering the silver's trading in the mid 1660s right now. We could get a bullish engulfing bar of this bar here, which would then actually mark this as a bottom, which would hold 1606 and start to reverse what looks like a downtrend, and start that process of possibly reversing this downtrend, or at the very least, as we have in gold, set up a wide trading range between 19 on the high side and 16 on the low side, and not $13, and not a return to $13. That's really what we need to worry about here in silver as we come up with the monthly close. Now, I will definitely do a podcast Friday afternoon after the market closes, or if not Friday afternoon, then Saturday morning, to update on all of the weekly, monthly quarterly closing prices and whatnot. And as far as my subscribers over Seeking Alpha and Stock Shocks and Rocks, we're continued to just, nothing has changed in these markets positionally. All of the research that I've given you and all of the trading points that I've given you for the quarterly close are still in effect. No new signals have been generated. So we'll have a much better idea of what's happening from a quarterly, once we get a quarterly close, because like I said earlier, this week is going to look screwy, and we're going to see a lot of weird. I fully expect to see a lot of weird headlines trying to move markets into the quarterly close. Oil is levitating at this point, again, trying to stay above a certain level to keep it from imploding. All right, and then the new guy on the block, Bitcoin. We've had a tremendous amount of volatility in the cryptocurrency market. Ethereum has pushed back nearly 50% off its all-time high of around $400. We had a flash crash last week and 2 weeks ago in Bitcoin that took it down to 2050. We had another massive attack on the exchanges earlier in the week here, which saw the price drop as low as it was dropping to 2300s to 2200s. Well, it looks like we may be starting to get a bit of a stabilization. I'm not really sure. The thing is, and again, we're coming into quarterly closes. We're going to get moments like this in the cryptocurrency markets. I saw something the other day that George Soros was attacking Bitcoin. I wouldn't be surprised. This is the kind of thing that you have to do if you want to. These are markets that are still very immature from an infrastructure standpoint, right? The exchanges aren't capable of handling huge volumes, and the blockchain itself has the Bitcoin blockchain. Itself can't handle too many transactions without being overwhelmed, and same thing. And Ethereum the other day was overwhelmed by a bunch of initial coin offerings that that were poorly designed and went badly, and it broke the back of the bull market in the short term. These are all growing pains. They're not indicative of markets that are about to collapse. They're growing pains of markets that are in massive bull markets. And it's the kinds of profits that are being thrown off right now that allow for the massive investment of the needed infrastructure, while dead enders like George Soros see the arbitrage opportunity to do damage to the reputation of everybody, of these currencies and of these markets, in order to tamp down on competition. Okay. I'm not saying that Bitcoin is cheap at $2,400 a piece. That's not what I'm saying. What I'm saying is that this is indicative of the kinds of growing pains that these markets are going to go through. So you can follow the day-to-day churns of this stuff, or you can just look at it and say, given what we know is going to happen, do I really care if I buy Bitcoin, if I diversify my cash holdings, my savings in Bitcoin, if I bought it $1,500 as opposed to $2,500 when it's going to $20,000? It's the same thing with gold. Do you care if you buy it, $1,200 or $1,100? Yeah, it's a 9% loss between. So what? When you're staring at life-changing money, when you're staring at a 10-bagger, you don't care about getting in at 9. You don't care about bottom ticking the market. It's why you always, if you're buying for a long-term position like that, if you're buying an instrument, gold, silver, Bitcoin, whatever it is, on the oil, on the idea that we're going to have a massive bull market at some point in the future, which no one can time, even Martin Armstrong, then the best thing to do is to just buy in tranches and wait and average in. Okay. Now, I wouldn't be buying Bitcoin right here, not until we get some kind of real, honest to God reversal signal. I don't even see a reversal signal on the daily chart yet, so there's no point in buying here. We may get another move back down to 2,000. We could easily get a move back down to 1,500. And then we'll get a move to $4,000. Markets have to wash out excess bullish behavior as well as excess bearish behavior. The problem that I have with calling a new bull market in gold and silver is that we're not seeing that. We're not seeing extreme bearishness or extreme bullishness. We're not seeing anything. We're seeing churn, really, within kind of well-established trading ranges now. Okay? So, but when those markets begin to move, and it's the same thing in the currency markets and everything else, and if you don't think that they're being managed at some level, well, they are. And we all know this. But they can only manage them within the current trend. They can't manage them outside the current trend. And I know that that goes against a lot of thinking in the precious metals community, and tough. It's true. Life's tough. Get a hard hat. The conspiracy theory stuff sells better, though. All right, that's what I got for you today. Y'all take care. We'll talk soon. And Keep your stick on the ice.